Hey everybody, welcome back to another dividend investing video. I'm Nick and this is the Dividend Growth Income channel. And with Halloween upon us, I want to highlight a few different companies that are heavily tied to this fun, spooky holiday whose stocks pay dividends. Now, these aren't buy recommendations, but think of these as stocks that we like for your watch list. Remember, I'm not a financial guru or advisor, just a guy who loves dividend investing, dividend growth stocks, and I encourage everyone to please do your own due diligence before buying any of these companies. Halloween is all about costumes, decorations, and candy. And I want to hear in the comments, what is your favorite Halloween candy? Mine is candy corn. Yes, candy corn is amazing, and I'm done pretending otherwise. And without further ado, let's get into this. 5 spooky dividend stocks for your consideration. Company number 1, Hershey's, ticker HSY. Hershey's company makes a lot of the best candies such as Kit Kats and Twizzlers, Rolos, Reese's, and the Reese's pumpkins sold during the fall season are way better than the standard Reese's cups. I think it's the higher peanut butter to chocolate ratio. This is one of the more underrated stocks in the consumer staples sector. It quietly rewards its shareholders with dividend raises, and the stock has done quite well performance-wise. Over the last year, Hershey's is up 22%, and over the last 5 years, Hershey's is up over 100%. This greatly outperforms the S&P 500 on both time frames. This is exceptional performance for a packaged food company, and with all that appreciation, the valuation on this one has climbed over the years. Hershey's is currently trading at a forward price to earnings of 26, and this is about 11% higher than its 5-year average. It looks like the best time to pick up Hershey's was there in late 2018 and early 2019, and right now it's certainly trading in more on the expensive side, particularly notable when compared to the consumer staples sector average of 19.4. Now, Hershey yields 1.86%, and this is about 13% lower than its 5-year average of 2.15%. Another consequence of Hershey's superior performance is this lower yield. And again, in late 2018, the ideal time to buy Hershey's, this was close to a 3% yielder. The dividend makes up 49% of earnings and 44% of free cash flow, and this is low for a consumer staple packaged food company, and this bodes well for the safety of that dividend, as well as future growth potential. The more room they have to grow, the better. Hershey is paying $4.14 annually per share in quarterly payments of $1.04 per share in the months of March, June, September, and December. And the next ex-dividend date will be in mid-November, giving plenty of time up into and after Halloween to have your shares for that next distribution. Hershey's has been paying a dividend for 33 years, and that dividend has been increasing for the last 12 years. The 5-year dividend growth rate is 7%. However, their latest increase announced back in July of 2022 was at 15%. And from all indications, the dividend raises should continue. We got healthy looking dividend growth. Nice. This is $6.6 billion in 2012 and $9.72 billion in the last few months. Shares outstanding are on the decline. It appears they buy back small amounts of stock every year. Definitely glad this is not going up. Remember, this is one we want to see flat or preferably declining. This is one I don't own, but I do wish I did. Anyone holding the stock is probably quite happy right now, and I would love to own a piece of this chocolate business someday, but for now I just admire it from the side and as a happy Halloween customer. Company number 2, Kroger, ticker KR. If you need to purchase Halloween candy, and if you live in the U.S., there's a very good chance you'll be buying it at a Kroger-owned grocery store. Kroger is the 3rd largest retailer behind Amazon and Walmart. Kroger is, in my opinion, another underrated dividend stock. Perhaps grocery retail is not the most exciting business, but an investor like myself appreciates so-called boring businesses like Kroger, which has been rewarding shareholders over the last several years. And this is a business that holds up well during trying economic times like inflation and recessions. Unlike Hershey's, here is another consumer staple stock that has been a great long-term hold for dividend investors. Over the last year, Kroger shares are up over 10%, and over the last 5 years, they are up over 110%. And in both cases, again, Kroger is vastly outperforming the broader market. Unlike Hershey's, Kroger is trading at least a fair value, trading at a forward PE of 10.8. This is about a 15% discount to its normal trading PE of 12.7. It's also far lower than the sector average of 19.5. The dividend is 2.41% yield, and this is about 18% above its 5-year average, so in terms of both PE and yield, Kroger is somewhere between undervalued and on the lower side of its fair value. I like it at these prices. Well, the dividend is easily covered by 26% of its earnings and 23% of its forward free cash flow. No concern here, we want to keep these numbers under 60%. Kroger pays its quarterly dividend in the amount of 26 cents per share in the months of March, June, September, and December for a total annual payout of $1.04 per share. This is another company that has been quietly growing its dividend at above a 10% rate for its entire 15-year dividend history, averaging 12% growth per year over the last 5 years, and its latest raise was at 24%. And like I said, this is a company that I like and am buying right now. Revenue is up year over year. They bought in $96 billion in 2013, and in the last 12 months, their sales are up $144 billion. A grocery retailer like this one is one of the companies I think stands to benefit from higher inflation. Kroger further creates value for us shareholders with its share buybacks. Shares outstanding are down from over $1 billion in 2013, and today in 2022, they have about 740 million shares outstanding. There's lots to like with Kroger, and what's more interesting in the latest news regarding a merger with competitor Albertsons, which is going to make Kroger an even bigger threat to the likes of Walmart and Amazon. They'll be selling a ton of Reese's Pumpkins and candy corn. Now, in my opinion, this is one of the best consumer staple stocks to own right now, and if it's not the best, it's in the top 3. Company number 3, Mondelez International, ticker MDLZ. My favorite Halloween candy from Mondelez are Sour Patch Kids. Their most popular products are Oreo cookies. Mondelez is an international company with more than 75% of its products being sold outside of North America. Now, Halloween is celebrated in some European countries, although perhaps not to quite the degree it is in North America. But who doesn't love some Cadbury chocolate? And over the last year, Mondelez is down a little more than 6%. And over the last 5 years, Mondelez is up about 38%. So it's outperforming the S&P over the last year, but the S&P has the edge, slight edge over the last 5 years. Mondelez is a stock out of this list that is getting close to its 52-week low, trading at a PE of 19.6, and this is pretty close to its 5-year average. It's also right in line with the sector average, so by this metric, we are close to a fair value. Mondelez is yielding 2.7%, and this is 24% above its 5-year average of 2.18%. And by this metric, the stock is looking undervalued. Now, how safe is that 2.7% yield? Well, the dividend takes up 53% of forward earnings and 58% of forward cash flow. A little higher than, say, Kroger or Hershey's, but for a packaged food company consumer staple, it's perfectly fine. I have no concerns with this level of payout. The dividend is paid quarterly at 38.5 cents per share in the months of January, April, July, and October for a total annual payout of $1.54 per share. And look at the dividend growth chart. That dip is when the company was spun off from Kraft Foods. Since that time, we have 8 years of consecutive dividend growth, growing at an average rate of 13% over the last 5 years, and that last increase was 10%. Revenue has been growing at a slow rate over the last 5 to 6 years since the spin-off took place. In the last 12 months, they brought in almost $30 billion in revenue, and that's up from $26 billion in 2017. Shares outstanding have been steadily declining so far. We are 3 for 3 in Halloween companies that do not dilute shareholders. We had 1.79 billion shares outstanding in 2012, and currently that sits at 1.4 billion. Love to see it. Mondelez is one of our stocks in the Dividend Growth Income portfolio that you can follow along with Kroger, and it's one we are actively buying right now. And I think this Halloween season is an interesting time to look at adding Mondelez shares to your watch list if it meets your investing goals. Company number 4, Target, ticker TGT. Target stores always have a wide selection of Halloween decor and also costumes for the little ones. This is also another place where many will buy their Halloween candy. I have to say, in doing the research for this video, I was pleasantly surprised with Target's online presence. I think it's really improved over the last couple years. And as a dividend investor, there is a lot to like with Target. The last year has been a bad one for Target. There's no way to sugarcoat that this Halloween season. But Target is down over 40% in the last year, and it's tumbled hard. The 5-year performance is a completely different story. Shares of Target are up 142%. So in the last year, greatly underperforming the broader market. But when you zoom out, Target has been a fantastic company and is destroying the S&P over the last 5 years, almost tripling their returns. The 40% drop over the last year has brought Target's valuation to trading at 13.2 times forward PE, a few points below its 5-year average of 16. This stock was expensive all through the COVID crash and stayed expensive through 2021, but has come down to an interesting valuation in recent months. Shares of Target currently yield almost 3%. Now this is 22% higher than its 5-year average of 2.42. Another sign that Target shares could be potentially undervalued. And the dividend looks safe to me. Seems like there is an outlier with the free cash flow and Simply Safe dividends here, but generally the dividend takes up less than 40% of free cash flow, and it's currently taking up 39% of forward earnings. The quarterly dividend payment of $1.08 is paid out on the months of March, June, September, and December, for an annual payout of $4.32. And the ex-dividend for Target is coming up on November 15th to get that next dividend payment on December 10th, 2022. Target has been a solid dividend growth stock. It is a dividend king. For 50 Halloweens, Target has been growing its dividend. It's been growing at a rate of 6% annually over the last 5 years, with that latest increase was 20% in June of 2022. You love to see a company give their shareholders that kind of raise, one we would almost certainly never get in our 9-to-5 jobs. Revenue over the last 10 years is up from $73 billion in 2013 to $108 billion in the last 12 months. Shares outstanding are declining steadily over the last 4 years, with 663 million shares outstanding in 2013, while today we are at 476 million. Target is that sweet combo of dividend growth and buybacks that has been highly rewarding for shareholders, and customers have been getting their Halloween supplies, costumes, and decor at Target, and I can't imagine this is going to stop any day soon. Company number 5, Walgreens Boots Alliance, ticker WBA. The Walgreens Boots Alliance, they are a couple large drug retailers, Walgreens in the States and Boots in Europe. Now, why would a pharmacy be on a list of Halloween dividend stocks? Well, if you go into a Halloween's any time in the month of October, you will find as much Halloween candy as you could ever want, as well as decorations and many other Halloween-themed products. Walgreens has one heck of a dividend history, but is down over 34% over the last year. And over the last 5 years, it is down over 50%. Lots of money has been lost on this one. Investors have to decide, is this a dying company or is the turnaround potential there? Now today, one can buy shares of Walgreens at a mere 7.2 times earnings, and this 5-year average is 9.9. Walgreens is trading about as low as it has in the last 5 years. And Walgreens is a high-yielding stock, yielding 5.78%. This is 63% higher than its 5-year average, so if you believe in the future of Walgreens, this looks like a potential entry point. The dividend makes up 42% of earnings and 48% of free cash flow. This is considered a little high for a consumer retailer, and it's a little higher than its average, which could explain the slower dividend growth. Now, Walgreens pays its dividend quarterly to the tune of 48 cents per share in the months of March, June, September, and December, for a total payout of $1.92 per share. Walgreens has been paying its dividend for 90 years. That is amazing to think about. Now, the dividend has increased for the last 46 years, even if the last couple years were only nominal increases. The average dividend growth rate is 5% over the last 5 years, but the latest increase was a mere 0.5%. Revenues are up over the last 10 months. Walgreens Boots brought in $72.2 billion in 2013, and over the last 12 months, they've brought in $133 billion. Shares outstanding are lower than they were 10 years ago. Not much has changed in the last few years, but no shareholder dilution. Walgreens is a place to check out on November 1st after Halloween when they put all that candy out on discount. This one is interesting. I don't own it yet, but I will be featuring more on Walgreens in an upcoming video in the next few weeks. So hit that subscribe and notification bell if you don't wish to miss it. Now for full disclosure, all I am long Kroger and Mondelez. They are both in our public dividend growth income portfolio that you can follow along on this channel. And if you'd like to follow along with that, like I said, give us a subscribe. Thanks for sticking with us, guys. Happy Halloween, and until next time, keep investing.